for the first time in nearly 2 decades, seaborne iron ore supply contracted in 2018. There were supply disruptions across geographies, and about 30 million tons of low-grade supplies exited the market. Now, let me take you through our outlook for the premiums. First, let's look at the lump premium. 2018 was an exceptional year with a record annual average of 25 cents per DMTU. Currently, the premium is trading at 34 cents. Going forward, we expect the lump premium to remain well above historical average prices, and this is due to tighter emissions control in China, which not only escalates the cost of sintering, but displaced sintering from direct charge ores. Now, let's focus on high-grade premia. Historically, the Platts 65 index used to trade at a premium of around 10% to the Platts 62 index. But over the past 2 years, this premium has increased sharply to 20% in 2017 and more than 30% in 2018. And we believe this increase is driven by structural changes in the China's steel industry. And as a result, we expect this premium to average 20% going forward for the following reasons. Firstly, the removal of 250 million tons of steelmaking capacity in 2016 and 2017 has raised China's steel capacity utilization to 77% in 2018. And in the 13th five-year plan, China is targeting a further increase to 80%. Secondly, capacity closures have largely targeted smaller blast furnaces. Bigger blast furnaces tend to utilize a higher proportion of direct charge products and high-grade ores. Thirdly, the share of the top 10 steelmakers in China is set to nearly double to 60%. And this is supportive of steel pricing and mill margins in China. In response to these structural changes, we have enhanced our product portfolio. Our lump-to-fine ratio increased to 68% from 66% last year, allowing us to take advantage of the relatively strong lump premium in the market. And remember that the lump-to-fine ratio used to average around 60% until about 5 years ago. Kumba has also lifted the average Fe content of its products to 64.5%. And as a result, the share of premium products, that being lump ore with more than 65% Fe content and fine ore with an Fe content of above 64.5% Fe, almost doubled in 2018 and now stands at 30%. And we aim to lift this further to 40%. And this to be achieved by blending columella and scission intermediate products differently. This focus on quality helps us achieve better prices. We have further diversified our customer portfolio, where China used to represent roughly 2/3 of export sales over the past few years. Its share came down to 56% in 2018. So Kumba continues to outperform its peers on FOB realized prices. Our lump-to-fine ratio is the highest in the industry, and so is the average Fe content of our products. Our average realized price of $72 per ton on an FOB basis is well above our peers.